Monday, March 21st in New York. And coming up this hour,
Fed Chair Jay Powell says the Fed is ready to back a half-point hike at its next meeting if needed.
Nike reports strong earnings overcoming supply chain issues.
And China pledges stronger monetary policy support for the economy.
Searching the scene of the China Eastern crash, more than 10 million Ukrainians forced out of their homes now. Ketanji Brown Jackson begins confirmation hearings. I'm Ed Baxter with Global News.
Has a Juventus star made the decision to leave Turin this summer? I'm Dan Schwartzman. I'll have that story and more coming up in Bloomberg Sports.
That's all straight ahead on Bloomberg Daybreak Asia, on Bloomberg 1130 New York, Bloomberg 99.1 Washington, D.C., Bloomberg 106.1 Boston, Bloomberg 960 San Francisco, Sirius XM 119, and around the world on BloombergRadio.com and via the Bloomberg Business app.
Hi, everybody. When does uninvestable become a screaming buy? That's among the questions we'll put to our guest this hour. It's very interesting that comes from one big financial institution. Hi, everybody. I'm Brian Curtis in Los Angeles.
And I'm Juliette Sarli in Singapore. Bloomberg Daybreak Asia, presented by Interactive Brokers Global Analyst. It helps you find new global investment opportunities to diversify your portfolio and discover undervalued companies that may have greater growth potential. Try IBKR Global Analyst today at ibkr.com/GA. Let's get a check of all the market action now and head over to Bloomberg's Doug Krisner. Doug.
Hey, Jules, we had weakness here in the U.S. equity market, but the modest declines were not really correlated to this big move that we had in U.S. interest rates across the entire yield curve. We jumped. Two-year Treasury last quoted in New York at around 2.11%, rising nearly 19 basis points on the day. A 10-year at around 2.30 as we begin trading in Tokyo. So the 10-year jumped 15 basis points on the day. All of this following very, very hawkish commentary from Fed Chair Jay Powell. We'll take a closer look at that for you momentarily here on Daybreak Asia. Essentially, though, what Powell had to say forced markets to price in a much steeper path for Fed tightening. So the Japanese equity market right now is coming online after a holiday yesterday. We are looking at a much weaker yen, down right now by more than 0.1% against the greenback, trading 119.65. The Nikkei rising by more than 1%. We have got a rally in energy shares leading the ASX 200 ahead by more than 1%. The Australian equity market has been up and running for about an hour now, and crude oil prices are flirting with $114 a barrel. That's WTI here in the electronic session. We're up by more than 1.5% after jumping nearly 7.5% in New York trading. That was after Lithuania and Ireland pressed the European Union to sanction Russian oil imports. Right now in Seoul, we've got the Kospi rising by just 0.4%. A lot more to talk about. We'll do it again in 15 minutes. Brian.
Doug, thanks very much. Also, Alibaba upsizing its share buyback here to $25 billion from $15 billion. And it actually goes to my comment earlier about screaming buy and uninvestable. You've heard that from J.P. Morgan about China, and so we'll get to that in a few minutes. But right now we wanted to take a closer look at the Fed's dominant story of the day. Witness what Doug was saying about what happened in the bond market. The Fed is signaling a more aggressive stance in curbing inflation. Jay Powell said that the Fed is prepared to raise interest rates by 0.5 percentage point at its next meeting if it's necessary.
The expectation going into this year was that we would see inflation peaking in the first quarter and maybe leveling out and then see a lot of progress in the second half. That story has already fallen apart. To the extent it continues to fall apart, my colleagues and I may well reach the conclusion that we'll need to move more quickly, and if so, we'll do so.
Powell said the war in Ukraine is aggravating inflationary pressures by boosting prices on food and energy and other commodities. And if the Fed were to hike its key rate by 50 basis points in May, it would be the first increase of that magnitude in some 22 years.
Well, after the bell, Nike reported quarterly revenue and earnings above estimates, global sales rising 5% to $10.9 billion. Bloomberg's Poonam Goyal tells us despite the results, many challenges lie ahead.
So right now, we know that the supply chain issues are still persisting. They're not necessarily easing from everything that we're hearing. And in terms of the geopolitical tensions in China, while easier comparisons would have you believe that, things could get better sooner, there are recent COVID outbreaks in China where cities are literally shutting down as we speak. So we have to see how the situation unfolds.
Despite supply chain challenges, Nike's revenue outpaced expectations in all regions, and that included Greater China, where sales fell less than predicted. Nike also maintained its full-year outlook of revenue growth in the mid-single digits.
Well, coming up in a few moments, we'll be chatting with Massimiliano Bonduri, founder and CEO of SGMC Capital, and we'll get the latest, his latest take on the markets. But now it's time for global news. Investigators are combing through the site of the China Eastern airline crash in Guangxi, in that area of China, out west. Ed Baxter has global news from the 960 newsroom in San Francisco. Ed?
Yeah, Brian, that's right. This is way too early to know cause of the crash, but the Boeing 737-800NG was last tracked heading almost straight down vertically. 132 people, including crew, on board. Bloomberg's Stephen Engel reporting here.
This happened 2/3 of the way through the flight. In fact, it was right about the area over Guangxi province, a remote area, that the flight would begin its descent. So something catastrophic happened. The investigation has begun.
Yeah, China Eastern has grounded its fleet of the NGs. Russia's invasion of Ukraine has driven an estimated 10 million people from their homes. The United Nations report says as well 3.5 million have fled the country. This is the fierce battle for Mariupol rages. Meanwhile, U.S. President Joe Biden has told the Business Roundtable CEO quarterly meeting today that Vladimir Putin is getting desperate.
And now Putin is back against the wall. He wasn't anticipating the extent or strength of our unity. And the more his back is against the wall, the greater severity of the tactics he may employ. We've seen it before. He's run a lot of false flag operations. Whenever he starts talking about something he thinks NATO, Ukraine, or the United States is about to do, it means he's getting ready to do it. Not a joke.
Biden goes to Europe for NATO meetings this week. Supreme Court Justice nominee Ketanji Brown Jackson began the confirmation process today. Already it looks to be largely a political exercise. Democratic Senator Amy Klobuchar.
With 115 justices having served so far in our history, you're the first black woman, and it's long past time.
And Republican Senator Lindsey Graham says he's used to being called now a racist because he asks hard questions.
The bottom line here is when it is about philosophy, when there's somebody of color on our side, it's about we're all racist if we ask hard questions. It's not going to fly with us.
And then Judge Brown introduced herself.
I decide cases from a neutral posture. I evaluate the facts, and I interpret and apply the law to the facts of the case before me without fear or favor, consistent with my judicial oath.
So questions tomorrow. Now, the Democrats already have the numbers to confirm her if they hold together and if it gets to be totally partisan. In San Francisco, I'm Ed Baxter. This is Bloomberg. Back to you, Brian.
All right, thanks very much, Ed. Let's get to our guest, Max Bonduri, founder and CEO of SGMC Capital. Max, the Fed chief, Jerome Powell, had a chance to say what he said today a week ago, but he chose not to. And then today he really did surprise the markets, the bond market in particular, with that huge jump. It's a good indication that the market was really caught off guard by that kind of dislocation in the bond market. Why do you think he chose to do that?
Well, you're correct. It is surprising that he did it now rather than during the Fed meeting. I guess it's probably, he has seen the reactions in the market and it's probably wanted to wait a little bit longer with respect to the geopolitical tension with Russia and Ukraine. But basically he did realize eventually that the Fed is well behind the curve and he did not want those expectations to run away. And especially he has seen a continued stickiness in the high prices of anything which is commodities, energy, so all of these things which are going to keep inflation high even going forward. So the expectation that peak inflation is behind us is not probably relevant anymore. Consequently, he has to change his narrative just to make sure that those inflation expectations remain a little bit anchored.
And Max, as of course you say, we certainly do have inflation and the yield curve showing perhaps a recession ahead as well. We are asking today, what's the best way to protect against stagflation?
Well, clearly when stagflation hits, what you want to do is you want to get assets which normally tend to be uncorrelated with the normal equity market, and in general invest in those themes and industries which continue having secular growth in terms of themes. Then, of course, in terms of asset classes, what you may get is diversification with respect to anything which is, of course, precious metals. You should probably get some exposures over there, and commodities. And at the same time, you probably have to stay clear of extremely high beta names, as well as the belly of the curve on the fixed income space.
If the Fed is actually pushing yields flatter and tilting the economy towards much slower growth and possibly a recession, doesn't that run a little bit counter to the Fed's inclusive economy expectations and hopes?
Well, it's basically everything that they're saying now. They probably should have said it quite a few months back and last year. They just find themselves in a situation where they do not really have a choice. Because as much as, of course, current inflation numbers are very high, but the actual number, is likely to come down in the next 2 or 3 quarters, hopefully. What really matters is the expectations, because if you get those, 6, 7, 8% inbuilt expectations, then you can very easily get inflation, skyrocketing higher. And that's not something that the Fed is prepared, there's a risk that the Fed is prepared to run. Therefore, they have to change the narrative, they have to change their taxes, they have to get more hawkish. And it's probably too late, but it's better.
I guess for people at the lower end of income distribution, they're threatened by both. I mean, a recession is not good for them at all. Lose your job is maybe even worse than inflation, but inflation is just not good either. We'll continue with Max Bonduri in a moment. This is Bloomberg.
Tomorrow, Bloomberg speaks exclusively with St. Louis Fed President James Bullard.
If you look at the data, it's become very volatile.
What are his thoughts on 2022 rate hikes and the path ahead for the economy?
It's a collective process, and we have to react to the data.
St. Louis Fed President James Bullard.
We're in a period of a lot of uncertainty around inflation.
Tomorrow morning at 8:30 on Bloomberg 1130, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
I need 4 more of the biscuits. I need us 2 burnt end platters, 3...
The Kitchen at Kai's Barbecue is firing on all cylinders.
Help you bring it to the counter.
He needs food runners who can hit the ground quickly.
86 on the chicken and we're short-staffed. Let's pick it up.
Indeed can help him hire great people fast.
I need Indeed.
Indeed you do. Instant Match instantly connects you with quality